All right, we have Sandra Smith, who is looking up at the numbers right now. She's been talking to traders in the pits of the CME Group all day long. Brian Piskarowski says we've had a full year's worth of upside in only 2.5 months. Is there any more room to go? And Fred Cannon says Goldman Sachs, despite all the bad news coming out in the New York Times today, is still a buy, and so are 3 other banks. He'll name names.
With gold plunging today, though, let's get right to Sandra in the trading pits. Is this all a dollar strength story, Sandra?
Yeah, definitely. I'm going to toss this to Larry Schober of SFG Alternatives. This gold sell-off was huge today, down 51 bucks. What does that tell you as a trader down here?
You know, right now it's telling me that no one knows where the safe haven is right now. They think that there's not going to be any more quantitative easing right now. We don't need a safe haven. People are searching for it. The important thing, though, is we went through a support right now of 1660. Very important.
Some folks are still holding on to those long gold positions. How low could it go?
Could go much lower than here, but to keep in mind, India and China love to buy gold. They're going to step in, and allocation trade is right around the corner.
Make sense of this sell-off at the end of the day in the stock market. Obviously, we started out strong based on the Fed's optimistic statement yesterday. Didn't really hold on to those gains. What happened?
People just don't know what to make sense right now, what's going on in the market. We've almost hit 1,400, a key level. Keep in mind that the Treasury yields have gone up so much, even from Friday. People don't know where to rotate, so we'll see what happens.
All right, guys, it was another exciting day down here. Larry Schober, thank you so much. Tossing it back to you guys.
Sandy, thank you very much.
Stocks eking out a gain today, at least for the Dow, making it the longest winning streak in more than a whole year, David.
But we have someone who says the market is due for a big drop. Joining us now is Brian Piskarowski. He is Managing Director at Wells Fargo Advisors. Brian, wonderful to see you. You bring up a great point. I mean, we have had a year's worth of gains in just 2.5 months. It is 11% gain so far this year. Are we due for a pullback, and how big?
Well, I definitely don't think we're due for a big drop. The fact of the matter here is the fact that we have seen nice gains. I think for a large part, the market is playing catch-up right now. When you look back where we were in the 3rd and 4th quarter of last year at those doldrums that we had on those October 3rd lows, we were fighting an uphill battle on 3 fronts. Double dip in the United States, hard landing in China, and obviously the sovereign debt crisis in Europe. On all 3 of those fronts, though, we've seen nice headway made. Clearly, when you look at the economic data here in the U.S., the market's reflecting the fact that we don't look like we're going to see double dip here. You saw that with the retail sales numbers. You're seeing that with the employment data. And even the big hangbacks that we've had in places like housing are showing some signs of better days ahead. That being said, though, looking on the Chinese front, looking at those fears of hard landing, we're starting to see that abate somewhat with some loosening on the part of monetary policy, but also you're seeing that countered this week with some more hawkish comments out of Premier Wen in the overnight. And then on the sovereign debt side, clearly it's this massive amount of liquidity that's been thrown into the markets by the ECB that has really brought on this risk appetite, and that's helped the plight of equities. And what you're seeing on the European markets, you're also seeing in the Far East. You're seeing a lot of catch-up being made, and those were big drags on client portfolios in the 3rd and 4th quarter of last year.
Okay, but then they got some buoyancy. I mean, here we see a NASDAQ at levels we haven't seen for 11 years. And so the question becomes for our investor audience, should they be trying to play catch-up at this point if they were too scared to get in? How should their behavior be manifested right now to get them yield, to get them some gains on their portfolios?
Right, Liz, it's interesting. You look at that 11-year period, but let's remember how much earnings have grown in that 11-year time frame, too. So from a valuation standpoint, you're not paying nearly the price you were 11 years ago.
Right.
More to the point, though, is the fact that the valuations of the market are not rich by any historical measure. That being said, though, you do need to acknowledge the fact that we have run a 1-minute mile in the first 10 weeks of 2012. And from that perspective, to see any kind of pullback shouldn't come as any surprise. This has been a nice run, and it wouldn't even take massive amounts of bad news just to bring some backing and filling. So from a perspective, how do you play it in this type of environment? One, we still continue to like and look to position for 2013 and looking in more cyclical sides of the market. You want to do that on a pullback. So we like the areas like industrials, we like areas like materials. You can look at some telcos and utilities if you want to hide out right here. I think if you're looking at different types of managers, you want to be looking at maybe some broad mandate managers that can have the ability to swing around into different asset classes and be nimble. And on the fixed income side of the markets, you're seeing the backside of what we've been arguing for the better part of a year, and that's been the fact that rates are due to rise when you start seeing the economic side of the world economy pick up, and that's starting to be a source of funds for markets. And gold's had a great run here.
What indicator do you look at for the economy picking up? A lot of people looking at unemployment numbers, a lot of people looking at earnings from corporations, but growth is still pretty stagnant. In fact, some people say the unemployment figures are a little misleading because growth hasn't increased to allow for those new jobs.
Yes, and you know what? I think what you're waiting for is still looking for some of this handoff from the public sector to the private sector on the unemployment side. More also, though, is we look at LEI. I think LEI is a great indicator, and that number continues to push higher here from a chart standpoint. And then looking also is you got to look at the change in the rate of change. You know, we saw that bottoming process in the second and third quarter of last year.
Yep.
You look at GDP, our forecast this year is 2.5%. So from that perspective, you shouldn't expect great years, but you got to start positioning for 2013, which we think will be a better economic environment and climate for stocks.
Better environment 2013 for stocks. Brian, good to see you. Thank you for joining us.
Great. Thanks, Liz.
And let's get right to Ashley. We have Guess earnings.
We certainly do, guys. Just came through on the earnings per share on that side. On earnings, they're coming in at $1.05, right on the money for estimates, but coming up just a little short on the revenue. The estimate was for $778.5 million, coming up at $775.8 million. So just a little bit of a miss there. Getting through some of the other comments being made, the company saying that quarterly Asian revenues up 27%. This has been a bright spot for the company, but on the other side, we're waiting to see what the numbers show coming out of Europe. It's a big market for the clothing and accessories retailer. So as good as it is in Asia, we're trying to find out what they've been able to do in Europe, which of course is suffering the consumers in Europe, and especially Italy, where Guess is very popular. So, but exactly hitting on the EPS, but missing on the revenue just a little bit.
40% of its sales come from Europe.
That's right.
And what is of most concern is that of the European shares, 45% come directly from Italy.
That's right.
And of course, Ashley, you know Italy. Some people say after Spain, you know, there's Greece, there's Italy, there's Spain, and then there's Italy.
Yeah, consumer spending most definitely down in Italy, and expected to remain that way for the rest of this year. So it'll be interesting to see what impact that has already had on Guess. So we're going to go through these numbers as they come through.
Let's get to Larry Shover. He's on the floor of the CME. Larry, stock not responding well to these numbers.
Yeah, you know, the revenue is down just a little bit, but not that much. I mean, I think the stock is in the middle of the 52-week range. We're seeing the stock look very correlated to Liz Claiborne, Express, Wet Seal. All of them missed revenue by a little bit. This is just in concert with all of them. Probably a good buy, especially given what's going on in Asia.
Okay, Larry, thank you very much. But you see the stock, the bid and the ask markedly low and below where the close was.